So what's up guys, I trust you all doing good. It's your host Aman and welcome to my channel. So if you are new here, kindly like the video, subscribe and turn on notification for more video like this. And also if you are new here as well, you can just check through the video list. Just start from the start, just catch up to where we are currently here. So thanks for doing that. So basically, today I'm just here to tell you about XAUUSD commentary, just market commentary. What do I mean? Market commentary, one way or the other, we learn from people's insights, people's perspective. When you look at market from people's lens, from people's point of view, then you understand the way they approach market and they look at things, right? So today I'll be taking you guys on a step-by-step procedure. I will take you on a walkthrough on gold commentary. Gold commentary. Just walk with me today. Grab your pen, grab a seat, and calm down and jot things down. So basically, higher time frame is very essential and very, very crucial in this strategy. So higher time frame for bias building, for directional bias, and mostly you see your CRT for directional bias range from higher time frame level. Let's say you have a CRT level that goes thus. Let's say this is a V-shaped level and there's a CRT candle forming around this region. Then you know that okay, this is the low of the candle. You achieve the low and you go for the high. So tapping the V-shaped level, then you continue to take the high out. That's basically what I'm saying in essence of using the higher time frame direction to build directional bias, right? On CRT candles to build directional bias. So today I'll be walking you you're on a journey with CRT, MSNR on gold with as regards the market commentary. So basically, take a look at what we have here. Just something not random, just something you've known and something that works, and it's all about repetition of what works, right? So today I'll be taking you on step-by-step procedure. So just calm down and follow me. So here, take a look at this. You can see that we're actually on a higher time frame. It's on a monthly time frame. It's on a 1 month time frame here. You can see that it's actually on a 1 month time frame, and you can see that okay, we are very, very much bullish on gold on a monthly scale. Even on a monthly scale, you are very, very much bullish. You can just go back and use your line charts and markers to see the overall higher time frame direction is actually bullish. So first and foremost, I say whenever you're looking at this, you establish your higher time frame directional bias range. If your time frame is bullish, if your time frame is bearish, if your time frame is consolidating, you know what you have to look for. So direction is very, very crucial and essential. So that's what I said. You make sure you frame your directional bias on higher time frame first and foremost when you open your chart. Don't just go to H4 and look for random CRT. No. And CRT works best with rejection, right? So what do you have here? We have series of bullish 3D candles. Last 3D month candles are very bullish candles. You can see from here, we have this month, second month, and the third month here. So the last 3D month candle is a bullish candle here, which makes more sense and which still shows or symbolize bullishness in market with an impulsive move to the upside. So what do we have here? So we are building our directional bias from higher time frame, weekly, monthly, daily, 3 months. Yeah, so let's go to weekly time frame to see what I'm trying to tell you today. So on a monthly scale, what do you have? On a monthly scale, what do you have here? So take a look at this. On a monthly scale, we have something very interesting here. Something very interesting. You just have to pay attention and make sure you train your eyes to see them. You make sure you train your eyes to see them, and you need to just pay attention. That's all you need for this. Train your eyes to see them and pay close and rapt attention to this. So what do we have here? We have series of movements to the upside. So we have this let's say this is a pullback here, then we have another movement to the upside, right? Then we have a nice pullback to the downside. So what are we looking for here? Let's frame our directional bias based on rejection and higher time frame CRT. So I said CRT works best with rejection. Don't forget that. Write that at the back of your notes. CRT works best with rejection, right? So what do you have here? We have a single candle CRT here, and I told you about we can have 3 candle CRT, we can have single candle CRT, we can have multiple candle CRT. So I've talked about this in the last video. I explained that we can actually have a 2 candle CRT, like a 2 candle with consecutive movements, either bullish or bearish, of the same color. They can actually form as one. Take a look at it like this. You have H2 CRT. 2 H2 candle can actually be a single candle CRT on H4. So that's what I mean. So what do you have here? So we have this higher time frame rejection, which is this. We've already know that we're actually bullish on higher time frame. here we're actually bullish on higher time frame, so look for more bullishness to the upside to just continue the trend. Just follow the flow, don't fight the flow. So what do you have here? We have open close key level here, rejection here. Let me turn this back to black. So we have this open close rejection here. That's the open close level that sponsored that buys to the upside on a weekly scale, right? So after that open close level, what can we say? We can see something very unique and something very special here. We add this CRT low here, this candle here, the CRT low, and we had this high at the CRT high, right? Now I know somebody will be asking that, okay, this candle here actually closed kind of above that particular week, above the particular week here. Okay, makes sense, right? This is how it works. The fact that this candle actually closed below this candle, and the second candle actually still closed above that level, makes it very much valid, right? Just like, okay, let's say we have series of two candles on H2 that open and close at your entry. Let's say you have an entry and open and close. It's going to be a wick on H3. It's not going to be a candle. So that same logic works here as well. Do you get? So you have this CRT low here mitigating this open close level, and we have this CRT high. That's on gold on a weekly scale, right? Which makes more sense. So what do we have here? I said when we have a CRT candle like this, let's say this is actually a rejection that we are working with. Let's say you have a rejection that we are working with here. This is a rejection we are working with. So this is the V-shaped key level or the open close key level, right? So wherever the key level is. So, and the first candle has already given us this. I'm coming. So this is the first candle. This is the first candle CRT. Let's mark things out together. Coming in a moment. So you have this, right? So the first candle has already given us something like this. Something like this. So we already have something like this, right? So basically here, this is the CRT low, and this is the CRT high, which is this. So that's CRT low and this is CRT high, right? So the moment you have the second candle here, taking out the CRT low and closing above it. So this second candle, let's say the second candle, and the second candle closed above here. Come in a moment. So you have this on daily scale, right? So the second candle closed above it, right? So the highest probability entries you can actually find is the closure, the V-shaped key level created by this closure of that CRT levels. This level, the V-shaped key level created by this closure of that second candle is the highest probability entries you can actually look for. Here. That V-shaped level created by the CRT closure is the highest probability entry you can actually look for the continuation of the CRT range. Something like this. I'm just anticipating something like this, coming back to this level and giving us some sort of a rejection like this to the upside to clear this CRT high out. So the higher probability entry is going to be this V-shaped key level you are looking for to continue the trend. I believe you understand this. So makes sense, right? So let's take a look at what we have here. So let me delete all this drawing. Come in. So here, something like this. Makes sense. So what do you have here now? After we got to the CRT candle range on higher time frame, right? So where is that V-shaped level created by the CRT candle? Which is this? Come in. Just go to your line chart to see it clearly. So you have this V-shaped level here, this one here, and we have this. So these are the two CRT candles. These are the two CRT levels that we had. You can just use your line chart as markers to see them very, very, very clear. So those are the two CRT levels that we had. The V-shaped level created by CRT candle closure. So you have this one here, the first and the second one here. So the line chart markers are very, very essential. You can't do without them, basically. So basically, let's go back to the candlestick with the candlestick chart and see. So take a look at what we have here. After the CRT candle actually closed above, see where we came back to mitigate. We came back to mitigate this level once. We came back to use it twice again. So that's why I said the highest probability entries you look for is that V-shape or A-shape level created by the CRT candle closure, right? That's highest probability entries you can actually look for, right? So take a look at what we have there. So just scroll to a lower time frame, a daily time frame to be precise. So on daily time frame, you can see that we have this is a open close key level that sponsors this rejection in price. So this is that weekly level. You can move it here. So sorry, this is the CRT level. I'm coming. This is that CRT level. I think this. Yeah. So you can just move the open close key level to this level, right? To this. Just to have one to avoid messy chart. So the moment we add this, take a look at what we have here. We add a daily rejection from a CRT level, so a weekly rejection from a CRT level. So this is that weekly V-shaped level created. So if you want to define this, you can just define it to this open close key level created on a weekly time frame, which is this. In daily time frame, rather, this is this, right? But mind you, I said we have multiple types of CRT candles. You have 3 candles, you have 2 candles, you have single candle CRT. So this is a 3 candle CRT that happened here on gold. What did I mean? So we have this candle here, the first candle, second candle, and the third candle. So let me repeat myself. We have types of various types of CRT candles. We have the 3 candle, single candle, and multiple candles as well, the 2 candles as well. So we have single candle here. This is an example of 3 candle CRT. You have this first candle, second candle, and third candle. So the moment you set this particular low here, then you consider these all these candles as one. Do you get? So let's go back and let me explain again. So we have types of CRT. We have single, double, and triple, and multiple kind of candles, right? So take a look at this like this way. You have 2 H2 candles. It's going to be a single candle on H4, right? So basically that's what I mean. So take a look at this. If you are to consider this candle, it's going to be a single candle CRT on H4 on any time frame rather. So let's say we have a 3 days time frame. So this candle is going to be a single candle and it's going to be a CRT candle on a 3-day time frame because that's actually a 3-day bearish candle. So which makes more sense, right? So let me delete all that and let's proceed. So what do we have here? We have this low here. This is the first of the candle, the second low, and this is the third low, serving as a CRT low, mitigating a V-shaped key level from a weekly time frame. So it's like a weekly rejecting weekly. So where is going to be our first target is this. First target is here. That's CRT high. If you pay close attention to this, you see that it's self-explanatory and it's something logical. It's not magic. It's just logic. So take a look at that. So take a look at what we have here. I said 3 candles, then we add this. After the 3 candle, we add the sweep of the previous CRT low, then you target the CRT high, which is this one here, right? This is the low and that's the high. I believe you understand this and I believe you are learning one or two things from here. Just try to jot things that you're learning down so that you don't forget. They say we speak because people don't read. Yeah. So take a look at that. So how do you find entries after this rejection, all of it in I'm framing for you? How do you find entries? You just go to H4 to see what's going on H4. Which makes more sense, right? So this is CRT low. And we add this. So this is the CRT low that we had here, and this is the rejection on the higher time frame that we had here. So how do you let me try to say something. So how do you not here in Podge? So how do you frame your entry from here? It's very, very easy. So first and foremost, after the rejection on the higher time frame, you can see that we've already established a bullish scenario with a breakout. Where is the breakout? So let's go on higher time frame. Let's go on line charts rather. You see that we have this first break of structure here and the second break here from that rejection in price, which already shows that we are very much bullish in price. And don't forget this on H4. So the higher the time frame, the stronger the zone. Don't forget that. So we've already had a break of structures, a breakout on H4, which is not even 1, which is 2. So the more the break of structure, the stronger the A shape or the V shape level that wants to start the range. Just take a note. Let's take note of that. Let's go back to our candlestick and see. After that break of structure, what do you have? Do you have any pullback in price after that break of structures? Yes, we had all this pullback in price after this break of structure that happened here. After this major break that happened here, we had this pullback. You see it clearly on line chart. So let's go to line chart and see the pullback that we had. You had all this pullback here, this one, like some sort of an engineered liquidity pullback. That's what we have there. So, but mind you, what else do we consider? We use the GAN box to see the 50% level of the whole range. So you trade in discount level. Yeah. So this is the GAN box to trade, to check. So wherever you'll be looking for is going to be the 50% level of this. It's going to be the range below the 50% level here, the discount level, right, to buy. So take a look at that. So wherever you'll be looking for is going to be that region, not all this, right? So now let's go back and let's proceed. Yeah, so basically we have this pullback that happened here, which is this level, which is all these weeks. So you had that pullback, which is all those weeks. So but mind you, after this pullback, what other POI do we have in 50% level, the discount level rather? So what POIs can we trade from? So let's go back to our line chart market to see. Add this coming. You add this one here, the first one here, the second one here, right? And also, as you pay attention to line chart with markers and your candlestick, pay attention to fair value gap as well, because there are also POIs like your upper close key level, V-shape and A-shape level. They are also POI. Because sometimes market just tends to clear liquidity and start to pump. It might not even mitigate that your V-shape or A-shape level. So, but mind you, there's a very close fair value gap that happened here, which is this one here and this. So here in this scenario, you use POI very closest to liquidity zones. Yeah, so you use POI closest to liquidity zones, even though you know you're placing yourself below the strong high or the strong low, just to avoid mis-entries or story that touches. Take a look at that here. So now basically take a look at this. So placing your entry from here sounds like this, goes like this. You have this, and your L cell below here. Yeah, below that strong wick. Yeah, just to be safe. So now take a look at how we have here coming. Why below here? Because just for you to know that, okay, what if he's not using this open, what if he's not using this fair value gap, what if he's using this V-shape key level? So even though he's using the V-shape key level, you just have a very deep drawdown to your SL then before you start to pump to the upside. So here, just have to play safe and very smart. So take a look at that. So you know you have to target this external CRT high, which is this. So this is like a 6-hour trade, something like this. So this is like a 6-hour trade, right? So take a look at that. So after that, take a look at that. So we add another break to the upside here. After the whole move to the upside, so we add another break of structure to the upside. Then take a look at how we scale up to the upside here. So we add another imbalance as well, taking out this low. This is actually an imbalance, a very huge one. This one here. So you just take out the imbalance and start to pump again to the upside. So take a look at this. Just take a look at that. So this is actually what I want to explain to you guys as regard XAUUSD. So I see somebody would ask that, okay, what if I can't see something nice on higher time frame? You can as well use H4 to confirm. You can use H1 15 minutes to confirm H4 CRT as well. Yeah, not necessarily. You can actually just say, okay, just know that you are moving from one range to another range. So just imagine you're now targeting this overall higher time frame level, this one here, which is this one. Just imagine this. So this is like 10-hour trade with a solid share, with a solid entry, and you know you are working with a very stable time frame, which is H4. This is not on lower time frame. This is not on 5 minutes or anything like that. But you just have to be patient. Yeah. Patient, and don't panic on minor reversal. Don't just panic on minor reversal because you know what you are working with. So this is basically what I just wanted you guys to pay attention to from higher time frame, from a weekly level. So let's go back on the coming from a weekly level. So take a look at this. So from a weekly level to a daily level, from a daily level to H4. So you know more of like MSNR daily, getting daily H4 breakout, weekly rejection weekly, daily breakout. But CRT just gives you a directional range what you are trading towards, right? When the range is complete, then you're out of the market. That's all. So CRT for your directional range, MSNR for your entries. So that's basically how you combine MSNR with CRT. And take a look at what happened on gold here. So just take a look at that. So just something logical, not magical. Just something logical. Just work with logic, and yeah, you'll be very, very good with yourself. So with time, you get used to all this. Yeah, I know it might be very hard at first, and none of this is actually very easy, but the sacrifice, it's worth it in the end. So here, thanks for staying to the end of the video. If you've not liked the video, kindly like for others to see, to help the algorithm. Subscribe and turn on notification for more videos like this. And also, if you find this video helpful, insightful, share to your friends as well. Let them benefit from this as well. The knowledge is free. You just have to pay attention, and the money is enough to go around. You just have to go get it. There is no time you go to the bank and they tell you there is no money in the bank. There is always money in the bank. They are just waiting for us. Rather, just come and pick it up. Let's work hard for it. So thanks for staying to the end of the video. Once again, do well to like and subscribe and turn on notification for more videos like this. Thanks so much, guys. Have a great day. Bye.